season shifts into high gear this week. Doug Flynn is a certified financial planner and co-founder of Flynn Zito Capital Management, and he joins us now. Doug, good morning.
Good morning, Lauren.
10 Dow stocks, 154 S&P 500 companies report this week. Are you expecting a theme to emerge here?
Well, you know, we've had 9 consecutive quarters of increased profits, and the third in a row with over 20% growth. So it wouldn't surprise me, although that should continue this round, for that to begin to slow down next year. That's where we're at right now.
And what about sales growth slowing? Because we've seen several companies come out. 35% of the 85 companies that have reported thus far have missed the street's expectations when it comes to their sales.
That's true. That slowed down a little bit. I mean, it's still, to look at it the other way, it's 65% have gone the other way. So, you know, that is going to slow, and that is the first indicator, and that's coming from pressures of maybe increased tariff costs. And it's slowing down a little bit. But so it's a little bit of a precursor, but the numbers are still very good.
But so they're talking about rising costs, right? But also a consumer that's being cautious, a dollar that is strong. These are some of the warnings coming from the companies that have reported and their CEOs on those conference calls. Do you think that bodes well as we get into the holiday quarter and certainly into 2019?
Well, the National Retail Federation has estimated that the growth for Christmas time should be up in the high 4s. That's probably down a little bit from the growth last year. But still, these numbers are way above average. The averages are always in the high 3s. So although we're trending still above the norm, it's a little bit of a slowdown beginning. And that's why we're anticipating that even if earnings grow 10% next year, instead of the 20+% growth that we've been having, it still bodes well for the market, although pullbacks are very normal and necessary. And this is right within the range of a normal pullback that we usually have a couple times a year.
Big tech companies are reporting this week. We get a trio of reports on Thursday. What are you expecting to hear from Amazon, from Alphabet?
Yeah, the most important thing I think about earnings, tech earnings in general, in the tech sector, a couple things. One is if you peel out tech stocks out of the S&P 500, you take out the FAANG stocks the PE ratio drops to like 13, which is very, very low. So it's because of those stocks that it looks like things are getting sort of average priced or above priced. And also another thing is interesting, after a period of 1, 3, 5 years, year to date, of growth stocks outperforming value, the last quarter was the first time in a while where value stocks actually outperformed growth. So if you're looking at your portfolio and you're loaded up with tech, it might be a good time to even that out and start looking at some value stocks which do better in a little bit more of a slowing down market and an interest rate increasing market.
Good advice. Doug Flynn, thank you.
Anytime.
All right.